Canada's main stock index rose on Wednesday despite a sharp drop in Bombardier Inc. after the plane and train maker was hit by a steep U.S. tariff as heavyweight financial stocks moved higher. The index was at its highest since June. Bombardier was last down 8.4% at $2.08 after opening at its lowest point since December 2016 following the U.S. Commerce Department's decision to slap preliminary anti-subsidy duties on its X-series jets. Story continues below advertisement. The company also lost out as Siemens AG and Alstom SA agreed to merge their rail operations. Bombardier had also held talks with Siemens, sources have said. On the positive side, the financials group, which accounts for more than a third of the index's weight, gained 0.2% as bond yields broadly rose. Toronto-Dominion Bank was up 1.1% to $70.13, while Bank of Montreal jumped 0.7% to $93.46. Canadian National Railway Company advanced 1.6% to $103.01. Investors were awaiting a speech by Bank of Canada Governor Stephen Pawles for clues as to how aggressively the bank may tighten rates from here. At 11 a.m. Eastern Time, the Toronto Stock Exchange's SPTSX Composite Index was up 35.42 points, or 0.23%, at 15,509.54, with just 3 of its 10 main groups in positive territory. Tahoe Resources fell 10.5% to $6.31 after it said Guatemala Supreme Court declined to act on renewing its export credential. Ski-Doo maker BRP Inc. lost 7.5% to $41.77 after announcing a bought deal secondary offering. Story continues below advertisement. U.S. stocks pared gains on Wednesday after President Donald Trump's administration called for slashing tax rates, but offered few details about how to pay for tax cuts without expanding the federal deficit. The plan proposed a 20% corporate income tax rate, a new 25% tax rate for pass-through businesses including partnerships, and a reduced 35% top income tax rate for individual Americans, according to a framework seen by Reuters. If passed, the plan would be Mr. Trump's first significant legislative win since taking office in January. Unveiling the plan is one thing, and getting it passed is another, said Victor Jones, director of trading at TD Ameritrade. While I think there is optimism, time will tell us how much of an impact that will have on the market. Investors are going to look for whether or not this plan will get any bipartisan support, or at least full support of the Republican Party. 6 of the 11 major SP indexes were higher, led by a 1.17% gain in the financial index. Story continues below advertisement. Shares of big banks, including Bank of America and Goldman Sachs, were up about 2% on rising bets of a third interest rate hike this year following Federal Reserve Chair Janet Yellen's comments on Tuesday. Ms. Yellen said it would be imprudent to keep rates on hold until U.S. inflation hit the 2% target. Traders now see an 81.4% chance of a December rate hike, compared with 71.4% a week ago, according to CME Group's FedWatch tool. The Dow Jones Industrial Average was up 14.21 points, or 0.06%, at 22,298.53. The S&P 500 was up 2.58 points, or 0.10%, at 2,499.42. And the Nasdaq Composite was up 31.95 points, or 0.5%, at 6,412.11. A 0.78% rise in Apple's shares was the biggest boost to the SP and the Nasdaq, while Goldman Sachs propped up the Dow. Nike slipped about 3.7% and was the biggest drag on the Dow, after the company posted its slowest quarterly sales growth in nearly 7 years and said it expected a further drop in revenue from North America. Micron Technology rose 8% after the company reported a better-than-expected profit and forecast results above estimates. Data from Commerce Department showed new orders for key U.S.-made capital goods increased more than expected in August and shipments maintained their upward trend, pointing to underlying strength in the economy.